All right, in this video, I'd like to talk to you about why it may be a good time to hedge. And normally I don't like to hedge, but in this crazy market, it's kind of hard to know what's going on. And so we're going to use our index trading system and the tools to determine what is actually happening. And if we go back to our settings compare tool, as you know, back on March 10th, the index trading system, we switched from using bullish setting to a bearish setting because we felt there was a bear market coming on. And we switched on March 10th. And 10 days after that, Wall Street announced we are now in a bear market, and they classify that as a drop of 20% in the indexes. So that is what happened on around March 20th. We went into a bear market. So if we go to the settings compare tool, I have it set up here, 310. So this is when we switched to bear settings, okay? And this is today's date. So it's been 4 months. And we can see the returns down here. All right. Now, we were in bullish. So it was our major trend indicator, which switched us to bearish, was right on the nose because we were in the bullish 5-1. So had we stayed over there, we would have lost 34% these last 4 months. But as you see, the default setting for bearish, the 3-1, is up 22%. So that was a good choice. So our major trend was working. But our major trends needs 6 months to analyze when the major trend is changing. So now we're in this bearish market. We need 6 months of returns to determine if the bearish or the bullish settings are working, which type of market that we are in. But we have something going on right now, which has never happened before. And we're going to come back to the Barron's website, and you can see this is dated April 8th. So this was actually 3 months ago, and it's stating the stock market is back in a bull market. Okay, so this was the shortest bear market we have ever had. And now we're back in this bull market, and we've been in that, according to Wall Street, since April 8th. Okay, or a little bit before that. It's when the market rises 20%. I didn't calculate exactly when it is, but here's what I want you, which is important about this article right here. It says, just because a bull market may be beginning doesn't mean a bear market can't return. And that's quite possible. So we can check for this using the index trading system tools, okay? So it is saying April 8th right here. These are important dates. So let's come back over here to the settings compare tool. Now today is the 7/10. So let's go back 1 month, okay? So we're going to start on 6/10, and we're going to put this in, and let's see how the market has been behaving this past month. So this past month, you can see, look at this. It's been actually behaving bullish, just like the article says. It looks like we are now in a bull market. And take a look at my default settings that I use in bullish market, which is 2-1. That one's up 10.53%, while the S&P is in the red. And our 5-1 is up 1.72. But look at what's happened in our bearish setting for the past month. We are right here. We lost 9% this past month. So the bearish is struggling. Now, this could just be a fad, so we need to take a little bit more examination. So I'm going to go back 2 months now. We'll go back to 5/10, okay? And now we hit submit. Now, once again, look at these. 2.0 and 3.0 are up 100% for the last 2 months. And we have some bearish, but they're not doing very well. So 2 months ago, the bullish settings are taking off. And here's our 2-1, up 58%. Okay, we used the 2-1 when we had that major crash in 2008, and after it was over, we went into bullish 2-1 and did very well with it. And you can see after this past bear market, it's starting to do very well. So this is 2 months return taking us back to May. And remember, that article was on April 8th. Okay, they were calling a bull market. So it looks like they were right because for the last couple of months, the markets have been acting bullish. So now let's go back to a 3-month return, and we're going to go to 410. We'll hit submit. Now this is the 3-month. Okay, this is back the day after that April 8th article. And as you see, the top performing setting is the bullish 3-0. And then other than that, it's going to bearish. And then here is our default setting 3-1. So we were doing very well with this bearish setting for the last 3 months. But as you see, over the last 3 months, we have now slowly shifted into a bull market. Now, in the index trading system, we need 6 months. So right now, we're not going to go back to a bullish setting for 3 more months. In fact, let's go back another month just to show you. Here, go to 310. I'm going to put in. Now, if we go back 4 months, you can see bearish is dominating. So we are in that bear market. So just like Barron's is telling you, and just like the index trading tools are showing you, you have seen now this shift. But when the markets shift, just like Barron claims, we can go back to the bear market. There's no guarantee. We need to see that 6 month return. That's the guarantee. But we don't have that 6 months yet. So that's why I was starting a little hedging portfolio. And in my hedge portfolio, I'm using the default setting of bearish 3-1, but I'm also hedging it with a bullish setting of 2-1. I'm going to predict that the 2-1 is going to take off. It's either 2-1 or 5-1. I don't know which one, but I'm going to go with the 2-1 for now because it's a smaller time frame. And usually when you switch from one major trend to the other, you get that volatility. So as you see, what they're saying in the markets is lining up with what's going on here with my index trading system tools. And so are we really in that bull market? If we are, then we should not be in these bearish settings. But this usually a bear market will last like a year and a half, 2 years, and that gives us that 6 month window that we need, and we weren't giving that this time. So things, like I say, are a little crazy. So that's why I started a little hedging portfolio. I talk about it in our trade room. So if you haven't already checked it out, please do so. You might want to consider something like that, at least for maybe another month or so, and see which way the market is really going to go before we go full bore back into a bearish or a bullish setting. All right, so I hope that helps explain stuff, and we'll see you at the top.